Did you know you can earn 3 to 4 times more money with your covered calls doing a poor man's covered call than a traditional covered call? Yep. So that's what we're going to go into in this video today. I'm going to show you guys exactly how to execute a poor man's covered call to magnify the amount of premium that you can collect selling covered calls on those. And how exactly I set up a trade today. So I'll show you guys a live example on Robinhood of how I executed that trade. So make sure you watch till the end. And if you guys are excited, hit that like button, drop me a boom in the comments below, and subscribe to my channel and hit the bell so you don't miss out on any of my future videos. As always, nothing in this video is financial advice. It's all for informational purposes only. So first of all, poor man's covered call. What exactly is a covered call and what makes this a poor man's covered call? Well, a covered call is basically if you own 100 shares of any given stock and you want to sell calls against it at a higher strike price to collect some premium, it's kind of like renting out your shares, right? With a promise that, hey, if it hits that strike price, you're obligated to sell your 100 shares at that given price. So for instance, let's look at Google, right? Google is currently at $155.95 per share. If you own 100 shares, that's about $15,595. And for each 100 shares, you can sell one contract of a covered call. So for something like this, you might want to sell $160 strike price or $162 strike price. So this way you enjoy the appreciation of that asset as well as keep the premium if it doesn't get to that point and if it doesn't get to that strike price. So that's basically a gist of what a covered call is. So a poor man's covered call is it's kind of funny, but basically what it says, a poor man's covered call. So you don't have $15,000 to buy 100 shares of Google. So what you can do is you can buy a leap option, which is a year in advance strike price at a lower price than what Google is trading at right now, for instance. And that would cost you a lot less money than buying 100 shares right now. And you can still, for next week or whatever it is, you can still sell covered calls against it. Okay. So that's what I did. And that's the example that I'm going to show you guys. So for instance, if you bought 100 shares of Google, 100 times 155.95, right? Equals $15,595. So that's the amount of money that you would need to have if you actually owned 100 shares, right? If you owned 100 shares, that's how much capital you would need to buy 100 shares. And when you go to options, let's go to options. Let's look at next week's expiration, right? And if you were to sell, for instance, right, the 162.50 strike price, you would collect $213 in premium. Okay. When I actually did this, so I'm going to use those numbers of what I actually executed. Okay. I collected 200. I sold these at 250. So I collected $250 in premium per contract. Okay. So let's use that as the number. Okay. So collected $250 per contract on this. Now, if you do a poor man's covered call, for instance, let's go into Trade Google options. Let's go a year in the future for the strike price, and it's April 16th right now, and they don't have any April expiration contracts. So let's just do March 21st, which is 339 days in advance, right? About 11 months in advance. And this is where I bought the 130 strike leap options. And currently that price is at 38.40. Okay, 38.40, but that's not what I paid. I paid a little bit higher of a price because after I bought it, there's some fluctuation in the market and it went down a little bit. So let's go back here and I paid 39.20. So $3,920 because each contract gives you control over 100 shares. So 39.20 times 100 is $3,920. So poor man covered call, one leap contract equals, it cost me $3,920. Okay. And guess what? Once I own that, I can sell a covered call just as if I owned 100 shares of the stock itself. So again, I collected the same $250 per contract. You see what a difference that makes when it comes to capital, right? So using this example, so the expiration that I picked was 2 weeks in advance because the premium was good, right? So if we look at this example, let's pull out a calculator. If I owned 100 shares of Google at the $15,595, right? And I collected $250 divided by 15,595. That's a 1.6% return. Okay. 1.6% yield in 2 weeks. Okay. Great. That's amazing, right? You annualize it. How many 2-week periods are there in 52 weeks? 26 of them, right? So let's do 1.6 times 26. Come up with a 41.6% annual yield. That is phenomenal, right? It's insane how great that is. So that's one thing. Theoretically, if you were able to do this every 2 weeks and got the same premiums, right? That's what it would end up being, theoretically, right? Now, with a poor man's covered call, this is where you get to have your mind blown, okay? So now we collected the same $250, but now instead of spending $15,595 buying 100 shares, we bought one contract for $39.20. So you divide that by $3,920. That gives you a return of 6.38, right? We're going to round this up, right? The 7.5, we're going to round it up to the 8. So 6.38% yield in 2 weeks. Now we take that 6.38, again, 26 2-week periods to make 52 weeks in a year, right? That ends up being 165%, 165.88% yield, annual yield. Yeah, if you need a moment, I completely get it, because that's how mind-blowing the poor man's covered call is, okay? Are there risks? Of course there are risks, right? It's investing. There's risks everywhere, but we have to make calculated decisions and take high probability trades to be winning in the long term, right? So what are the risks? Well, guess what? If Google is below $130 by March 21st, 2025, contracts expire worthless, you're done. But by then, hopefully you'll have collected a lot of premium, where I've seen examples where your poor man covered call, the long call, can and sometimes end up being free because of all the premium you've collected selling the calls. It's I've seen it happen. Okay. But if that expires worthless, you lose the $4,000, right? The $3,900 if it's below that. But what are the good sides of this? You're generating passive income on a smaller amount of capital than it's needed, right? So every 2 weeks, if you're able to generate $500 in passive income off of $4,000, that to me is pretty good, right? Compared to tying up, $15,000, $16,000. So what I did was I did 3 contracts. Okay. I did 3 contracts. So the 3 contracts cost me $11,760, which gives me control over 300 shares. And guess what? That's still cheaper than buying just 100 shares of Google, right? Because I would have had to spend $4,000 more to be able to get another 100 shares of Google. So I did that. And then instead of collecting just $250 like I would have if I had 100 shares, I collected $750 in premium for 2 weeks. Okay? Because I was able to sell 3 contracts against that. So this is how I executed okay, this is how, if you were to do this, these are the steps to execute a poor man's covered calls in Robinhood. Okay? So I went ahead, went 11 months in advance because they didn't have April, so I went to March 21st. Call, buy, right here, buy. Let me move this out of the way so you guys can see, right? Total cost is $38.40 per contract. So each contract right now would cost $3,840. Okay. Now, once the long call is purchased, which is the leap, right? At that point, that's when we can start selling the covered calls. For this Friday, since there's only 3 trading days left, and it's 2 days have already gone in the trading week, there wasn't a lot of premium. So I went a week in advance. I went to April 26th, and this is where I'm still in the call, but instead of buy, I click on sell. Okay, I click on sell. And this way, well, let me X this out, right? Call, sell, and for each contract at this point where Google is right now and where the option contracts are, the total credit I would get at this moment would be $2.13 per contract. Okay, and this would be a credit. So I'm collecting that premium. So as long as Google stays, below that 162 strike price, 162.50, I get to keep all that premium as passive income. Okay, cool. So that's how this trade would get executed. Now, I'm sure you're going to ask, okay, what was your thought process, right? Why did you do this? Why Google? Why now? All of that stuff. And again, these are just my thoughts, not financial advice, okay? And yeah, I posted this exact trade when I executed this a couple of hours ago, right? Well before the market closed. And I posted it in my Patreon. So basically, yep, bought the calls, strike price. This is how much I paid. This is how much I collected, which you guys can see right here when we go into Google, right? And that's when I executed the trade. I paid this much, but collected this much in premium. So yeah, if you guys want to see how this trade plays out, and if you guys want to know exactly when I'm getting in and out of trades, like these are a bunch of trade posts that I made today because it was a pretty active day, right? Make sure you click on the link in the description below and join my all access Patreon. And I've got educational resources. I've got a weekly watch list. I've got a community chat where I chat with the members, as well as, the trades that I'm getting in and out of. I post them exactly right after I execute the trade. So these aren't some theoretical trades that I think would work or would not work. I don't know. These are trades that I'm doing. So, there are winners, there are losers, but these are the trades that I'm actually getting in and out of. And long term, I have been quite profitable. So if you guys want to see my trades and all of that stuff, join my all access Patreon. Now here, let's look at the charts and look at what is going on, right? So this is the 1-day chart on Google, right? You see the ups and downs, and yep, I use my favorite Lux Algo Premium suite for my indicators on TradingView. If you guys want to try it out risk-free for 30 days, I've got a link to that in the description below as well. So make sure you check out Lux Algo Premium, okay? Great indicator because I don't have to draw all of this stuff out. So my initial thought process was, okay, there was a big dip in Google. It started coming back up. There was a change of character. Went up, went towards the order block, break of structure. Again, higher high, higher low. After the break of structure again, it pulled back closer to this positive order block, went back up. Another break of structure happened right here, went up, and then there was a pullback again coming down towards a bullish order block. Money flow is also positive. So this is why after yesterday's pullback, I thought today was a good day to kind of get into this, okay? And when I turn on my Lux Algo signals and overlays, right, there's a bullish buy signal right here that it generated. Candles are green. Price action is above the Neo Cloud and the Smart Trail. All of this shows a bullish trend. So, I've gotten really good results from using Lux Algo. So I do believe in their system along with the traditional price action, strategies that I use. So using all of that, I thought it was a great time to get into the trade on Google today. So that's what I did. So there you have it. That's what a poor man's covered call is. Cheap way to be able to get into a position to be able to sell covered calls and generate some passive income that way, renting out your shares, collecting premium on it, right? It's good to be the insurance company, right? To collect the premiums. So that's how I played it out. That's how I posted it. That's what I did. If you guys enjoyed this video, please give it a huge thumbs up. Let's get this video to 1,000 likes. And do not copy the trade that I made today with Google, because I have no idea when you're watching this video. I don't know if you're watching it the day after I post it, or if you're watching it 6 months or a year after I've posted it, okay? So again, that was just an example. That's a trade that I made on that specific date, okay? So if you guys have any questions, drop me a comment below. Join my All Access Patreon, and I will see you guys on the next one.